In Section 15-4, we have to do our final adjusting entry for federal income tax payable. Prior to doing that, we need to post adjusting entries and prepare an adjusted trial balance as well. So here are the adjusting entries we've done up to this point. We need to post all of those into the ledger in order to update all of those account balances to be as accurate as possible before we create our income statement and balance sheet. So the posting of these is no different than the posting we've done for the last 12 chapters. But the idea of this and the key to it is that it's updating our account balances to be as accurate as possible before we create those financial statements. After we have completed posting, we are going to create an adjusted trial balance. So we did an unadjusted trial balance at the beginning of chapter 15 with all of the account balances up to that point. Then we did all of our adjusting entries in order to bring those balances up to as accurate as possible at the end of the year. So then once we've posted, we'll do an adjusted trial balance. So here is our adjusted trial balance. We will use these numbers in order to calculate our net income, starting with getting our account titles and our account balances from our updated ledger. And then we will use all of the numbers below income summary. So that is the account title right here in the middle. Everything below income summary are the accounts that go into the income statement. We are going to use those accounts from the income statement to calculate our net income. So add up all of our credits, add up all the debits, subtract the two, and that $103,000 amount is our net income. That is the number that we're going to use to calculate our federal income tax. So it's important to understand that paying federal income tax for a company, similar to how we did it for our payroll tax. However, we no longer need to look at whether it's married or single and how many allowances the person has. Now we need to calculate the net income and then determine the tax bracket that they're in, and then the associated marginal tax rate. So for our $103,000 net income, we fall between $100,000 and $335,000. So that means we're going to have $22,250 of federal income tax plus 39% of the amount over $100,000. So our net income before federal income tax is $103,000 amount there, minus the amount over $100,000 gives us $3,500, and we take that amount times 39%. So that gives us our marginal income tax. We take that amount plus the $22,250 given here in the bracket to calculate our federal income tax. Total federal income tax, $23,622.40. That is the balance that we should have for federal income tax expense in our ledger. So we'll need to do an adjusting entry to make sure that that is the balance that we have. So you could see here that our federal income tax expense balance is currently $20,000. So we need to increase that with a debit by $3,622 to give us the correct balance, our total amount that we owe. And then we credit federal income tax payable. The reason there's already $20,000 in the federal income tax expense is because the company made an estimate at the beginning of the year of how much they thought that they would owe for federal income tax and put in an estimated tax payment every quarter. So they thought that they would owe about $20,000 in federal income tax. So every 3 months or every quarter, they put $5,000 into this account. This is much better and much less of a hit than writing one check for $23,000. So they spread out the expense over the course of the year. Now we need to do our adjusting entry to bring that amount up to the full amount. And here is what our adjusting entry for federal income tax expense, federal income tax payable, and then you will have to post those amounts. And that is section 15-4 and chapter 15.